Hello my fellow freedom builders and welcome back to the channel. Today I am gonna make yet another video about this potential US dollar crash that I talked about the other day. And today we're gonna look at what you could potentially invest your money in if you believe that the dollar is about to crash or even collapse. So that is it for today. Now, I just recorded this once and my software simply deleted the entire thing, so here we go again. If that doesn't deserve a like and a subscribe, I don't know what will. But here we go again. Let's hope that it all gets saved this time so you can get some benefits out of it. Now, I should say that I'm not an economist and there might be areas here that I have not touched on. And as you did with my last video, you are welcome to comment and ask questions and so on. That is very nice when you do that. And let's get right to it. Now, just to recap from my first video, I talked about how there was a potential dollar collapse coming. Now, I'm not saying that it is coming. I'm not saying that it is coming right now, but we are talking about some potential scenarios that I think it is important for an investor to have in mind when we put our long-term investment plans into order. So what I said in the last video was that over the last many years we have, or the world have had, the US dollar as a reserve currency, meaning that is the main currency that a lot of trades is done in. And it all started, or it actually started back in the 20s and 30s, but it was really getting strong after Second World War with something called the Bretton Woods, where all the other large currencies were pegged to the US dollar and then again to gold. The problem was, and that has been the problem with many reserve currencies during the history, was that United States, they actually liked the being able to print a lot more dollars than they had gold in reserve, meaning that their external dollar liabilities was going up, whereas the amount of gold they had storage were getting lower. And all of a sudden they jumped off from the gold standard, and yes, their debt has exploded ever since. And that was all I talked about in the first video, and I'll link to that below so you can go down and see it. Now, what I have gotten of comments since my first video is something like, yeah, well, it's okay to talk about a collapse, Hans, but it's not gonna happen, and the US dollar is strong and United States is strong, and so on and so forth. Yeah, well, the thing is that if we look at the history, and this I have taken from a YouTube channel, I'll link to it below, but I just made a screen dump here. He had some very good visualizations of the history of the last several hundred years of dominant primary currency in the world. And as you can see, the US dollar here has been the main currency for 100 years, or just about. Before that, we had the British Empire, the United Kingdom, that was all over the world, and they had their pound as the world's main currency that all other trades were pegged to, and they were the main currency for 105 years. Then we had the French currency, we had the Netherlands, we had Spain, we had Portugal, all big trading nations, and it was different catalysts that made their dominant currency stop being so dominant. But it's just to say that all of these time spans has been just around 80 to 110 years. And what happens is that when a currency has been the dominant currency for something like 100 years, that means 3-4 generations, meaning that no one alive can remember that, for instance, the US dollar not being the reserve currency of the world. And that is why when I talk about the potential crash of the US dollar and United States as a big power in the world, people are saying, oh no, that could never happen. But it can, and it has all through history. And it's just that none of us can remember when it happened the last time. Our parents can and our grandparents can. So the common narrative, the thing we're telling ourselves is that this time it's different. And it just might not be. I'm not saying that what I'm going to talk about today is going to happen tomorrow or next year, but it will probably happen in my lifetime. I'm 47, planning on being at least 147, but I'm not sure that the US dollar will keep being the primary currency in the world for the next 100 years. not maybe even the next 10 years, but let's see. What I'm going to do today is I am going to talk about the good, the bad, and the ugly scenario. If you don't know the reference here to the old Clint Eastwood movie, then you need to brush up on your movie history. And after you've seen this video, you need to go rent The Good, the Bad, and the Ugly to see it. It is an absolute classic. What I will start with today here is the ugly scenario. And that is kind of in line with what I talked about in my last video. That is the worst case scenario. As I said, I'm not sure that this will happen or when it will happen, but it is an important thing to consider as an investor, that it might happen. And what will I do with my long-term investments? Because what I have heard from several of you is, yeah, well, currencies fluctuate and I'm a long-term 20, 30, 40 year investor. So of course the dollar will come back. Well, it just might not. And if you have all your money exposed to US dollar investments, maybe as a dividend investor, then your $1 million retirement fund might only be worth $200,000 when you are done working and have to retire in 40 years. I'm not saying that it will be, but I'm just saying that you have to consider the possibility. All right, so the worst case scenario is that the United States lose their currency as a main reserve, so that the US dollar is not the reserve currency of the world anymore. That can happen primarily with two different catalysts. The one is quite slowly building up, or should I say quite quickly actually, that is piling up debt. The United States are right now in a huge fiscal deficit. They are just piling on every single year, and as I mentioned in my first video, they are right now paying something like $350 billion a year just in interest. And that is with the low interest we have right now. If that interest goes up, well, then they are in a world of hurt. So that is one of them. The other, and that is, this one is their own fault, you could say. They're building that up. Of course, there is a virus right now, but they were building that up long before that. So the deficit and so on. But the petrodollar, as I mentioned in the first video, is the fact that with being a reserve currency, all oil in the world is traded in US dollars. If China, maybe also Russia, maybe even some Middle East country succeed in making an alternative for the petrodollar, meaning they might, as I said in my first video, they might be building an oil future based on gold, and part gold, part Chinese yuan. And if they succeed in that, if the petrodollar is broken, then I'm pretty sure that it is game over for the US dollar as a reserve currency. You might say that that will not happen, and maybe that was a realistic thought 40 years ago, and we could see that United States have been pretty eager to quote-unquote democratize different countries in the world that challenge their statures and the petrodollar. You could take a look at Libya and Iraq and Iran and so on. Right now there are very strong forces building a case against the petrodollar. And I think that the petrodollar will be broken within the next somewhere between 5 and 15 years. So if the reserve statutes end, I'm pretty sure the dollar will collapse. Not in a way where we are not having US dollars tomorrow or the day after the reserve statutes collapses, but in a way that dollar might drop quite a bit. And I have been asked since my first video, how much could that be? Well, right now we are down from the top to right now 19% minus. But if we look back in time, as I mentioned, after the crash in the .com crash here, we saw a drop in the value of dollar of something like 40%. And that was not even a collapse of the dollar. That was just a drop. So I'm not sure how much, but if we are talking a potential 40% drop, that is way down. And that was not even a collapse. So if we are seeing an actual dollar collapse, I don't know, 50, 60, 70%, I'm not sure. And I don't think anyone is sure. So we will, if this happens, see the dollar collapse. That would mean And that goes, of course, also if it doesn't collapse, but just goes down in price, that means that the US import prices will go up and their export prices will go down, meaning that it will be easier for them to sell their stuff abroad, overseas. Yes, it will, and that would help some companies. But overall, if the dollar goes down a lot, that would make the import prices explode. If the import prices explode, that means that the groceries, the day-to-day stuff in the shops will explode as well. Of course, you could say, yeah, well, then they just buy US stuff. Yeah, it is so that the United States are a huge importer. And there is no way on earth that they can get all the stuff they are buying just from local production and manufacturing. Of course, they could build that over some decades, but as the situation is right now, they are importing so much stuff that there's no way that they can produce their way out of this, so the import prices would explode. That, of course, would mean that today, with the prices, a normal worker at a minimum wage or a bit above that have problems enough paying for their day-to-day stuff they buy and the rent and so on. So they would demand some rise in salary, not just rise in salary, but kind of double salary, which would make inflation explode. That would make it impossible for the Fed to keep the interest low, and that would mean that the interest rate would go up by a lot in the United States. That would mean that the companies today, we can see that there are an explosion in the number of so-called zombie companies that simply are borrowing all the money they need to pay the expenses. They're kind of doing the same model as the United States, as a state. And a rising interest rate would simply make the United States go out of business. Not out of business as in closing down, but out of business as in they would no longer be a strong world power. Then, of course, someone would say, oh, yes, they would, because they still have their military. Yes, they do. And, of course, they could come with some brute force. But if they have burned all their bridges and all their friends are gone, the world is a large place, and we can see that their military have been stretched quite a lot by doing Afghanistan and Iraq and so on, so they cannot keep control of the entire world. Another thing is that right now, their military, all the salaries, all the buying their fighter jets and their hangar ships is paid for by US dollars. Meaning that they can just print some more money and then buy some more military stuff. They can do that right now, but if the dollar collapses, they get a hard time buying so much goods. So that's another thing. Hasn't done so much with the trading part, but more with the world order part. This is what the economists are talking about with trembling voices as the worldwide reset. And if that happens, the world is, at least for a period, not going to be a very nice place to live in for many parts, because this would not only hit the United States. This would hit Europe, that has a very, very fragile currency as well. It would hit China, that is the big manufacturer of all the stuff that United States buys. And yeah, well, it would pretty much affect the entire world, and no one can predict what would come out of this, throwing everything up in the air and see what comes down. So it's just to say that this is the ugly part. This is the thing we don't wish for, but that we might see in some variation over the next couple of decades. Now, what should we buy if we see some signs that this is just about to happen? Well, I would recommend gold, silver, and overall metals. In a scenario like this, the question is, should it be physical metals or should it be ETFs covering some gold and silver? Now, if everything is thrown up in the air and we don't know what comes down, I would definitely not be or feel secure owning some ETF, which is a company, a fund, buying some gold futures, maybe some physical gold. But what I would feel most secure doing is actually owning the gold and the silver as a metal, having it in my drawer, or as I do in my bank box. I have been buying gold and silver for some years now, not because I'm expecting this, but simply as a hedge. I think there is a good value in that, and it's not making much interest, but lately, of course, it has gone up in price. So the metals, real estate, land, and of course, cryptocurrency has come into the field as a potential thing to buy. It is not something you have to transport, and as long as the internet and the entire digital world exists, then cryptocurrency is something that should be reckoned with in the future as a potential alternative to gold and silver. And here I'm not talking about all sorts of crazy shit coins. I'm actually talking about the large ones, the Bitcoin, the Ethereum, so on. Some of these large Bitcoins or cryptocurrencies that people know. So that is, in the worst case, in the ugly scenario. I'm not saying, just to say again, I'm not saying this will happen tomorrow. It's just to say this is one of the potential scenarios of the future. But let's look at one scenario that might be a bit more coming right now, or at least in the upcoming years, and that is the bad scenario. Now, the bad scenario, we still see the US dollar dropping maybe 30%. It already dropped 10%, but it could drop 10, 20, 25% more without being a complete collapse. This would also be due to the US debt. As I said in my first video, when the gold wasn't supported by a gold standard, it was kind of supported by the United States as a value of nation, meaning that when I sit here with a $100 bill, then I know that it is backed by a good, growing, sustainable nation. And with the amount of debt they're taking on right now, there's not much sustainability in that. Then, of course, there is a lack of trust, and that is when the world needs a reserve currency, they want it to be in a reliable state where you can trust the management, where the leader of the nation is not accusing everybody in the world of stealing from the state and drawing the countries out of every organization that they don't like the color of. And right now we see United States pulling out of the Paris Accord, the Paris Agreement. They are threatening the World Trade Organization. They are drawing them out of the World Health Organization and so on. So they're not working with the organization. They're just saying, you are frauds, we are pulling out. And this does not build trust in a company. Also, a company saying, buy only American goods, make America great again, meaning we don't want nobody to cheat us, so every single trade agreement in the world has to be renegotiated. This is not building trust. So what I think is that this scenario is more likely, at least in the shorter term. That would, of course, also make the import prices go up. It would also affect the inflation, the interest rate, but in a bit smaller scale, or at least a bit slower scale, that would leave the United States very weakened, and it would be possible to hedge, because it would not be a collapse that would affect the entire world all of a sudden. It would more be something that we could invest and hedge us out of. Still, we are talking about gold, silver, and metals all over. And here ETFs might be a solution. I still like owning the physical stuff, but an ETF could be a solution. Mining stocks is also a possibility, but be careful not falling into the trap of just buying any mining stock or a mining ETF, because not all mining stocks will be strong if the dollar drops 30%. Of course, if the dollar drops 30%, metals, gold and silver, that is denominated in in US dollars, tend to go up. But just be aware that some of the mining companies, for instance, they are selling their gold in US dollars, but some of them have their costs. They have to pay their costs in another currency. Imagine the worst case scenario that they have to sell, all their revenue comes from dollars, but they have to pay all their cost in, let's say, euro. I don't think any mining company has that entire scenario, but let's just imagine. That means that if the dollar is cut in half, then their revenue would be cut in half, but the costs would be double. So be aware that you have just to dig a bit deeper and not just buying mining stocks because yeehaw, now the gold is going up. You have to dig a bit deeper and finding out how the revenue and cost structure is in the different companies. Cryptocurrencies are still a possibility. Personally, I am hedging my US investments with options or futures, meaning that this drop we have seen in dollar lately, I have only been taking about 20% of that drop. The rest of it has been hedged. It also means I'm choosing a hedge where I'm not exposed to either upside or downside. So I'm not hit by the downside, but I don't get the upside in the dollar either, because I'm not a currency speculator. I'm a longer term investor, meaning I like to know what I can get for my dollars in the future, and that is how I do that. I might make a video about that, how I do it, but just to know that that is a possibility. You're paying a price for it, of course. I'm paying a little insurance price, but that means that I'm not getting hit by the current downturn in US dollars. Then, of course, you could buy European stocks or stocks in another country. If you are a US resident, you could simply buy European stocks. Or if you are European, you could just stop buying US stocks. But I assume that many of you have some positions in United States stock or US dollars. But it's just to say that this is a possibility to allocate more money into non-USA stocks. And of course, if you want to buy US stocks, you could buy stocks where most of the revenue, most of the sale is coming from abroad. Now, there are some different statistics here, and I'll link to some articles below. But for instance, you could have a look at, if you want to be a long-term dividend investor, you could have a look at which sectors are mostly allocated or mostly focused on non-US currency. Meaning that international trade, that is the green, and we have the revenue from United States, that is the blue. You can see S&P 500 aggregate sector geographic revenue exposure, meaning that if you're going into the utility sector, then only 3% of the revenue in the S&P 500 from the stocks in the utility sectors, only 3% is coming from international revenue and 97 from United States. So if you're buying into utility stocks, there's a pretty good chance that you will have a maximum exposure towards US dollars. Whereas if you're choosing the information technology, and that is of course what we have seen going up now with Facebook and Microsoft and so on, they have a much larger exposure to non-US countries and non-US dollar. So that is definitely something you can do, and you can go even further. Now, these are stats I found from 2017, but you can go into every single company and figure out where they get most of the revenue. But as you can see here, and again, these are 3 years old stats, but you can see Philip Morris, 100% of their revenue from overseas earnings. Or not revenue, but overseas earnings here. Newmont Mining, Qualcomm, Skyworks, so on. You know many of them, Lam Research and Applied Materials. So if you think that the US dollar will take a beating, then it could be a good thing to go focusing on stocks that have a big exposure outside United States. So that's also a possibility. Now to the last option here, and that is the good option. That is the best case scenario. And when we see it here, we see a United States with high trust and complete control of their, especially the deficit, but maybe also starting to pay off their debt. Now, how realistic is this? It's not. Let me just say it. I don't think this is going to happen. The way they have chosen, there is no way back. We will see a higher and higher deficit, higher and higher debt. We will see a United States not being able to pay their interest because people don't have trust in their money. But let's just say, for the case of it, that they manage to build up a high trust and people all of a sudden say, yes, now we believe the United States over China when the two presidents are talking and they are getting that deficit under control. The thing is that to get to this point where they get their deficit under control and they're starting to pay off debt, they would simply have to stop printing money. They would have to stop taking on new debt. And to do that would mean that the US growth would pretty much be cut in half. maybe even more. It would simply put a stop to the US economy. The US and most of the Western economy is built on constant growth. And if this were to happen, they would have to cut the growth down by a lot for many years to get this under control. And that's why I'm saying this is not going to happen. But if it were to happen, the dollar might regain some of its value. And I'm talking long term here. So what happens here with the dollar is that it might go up for the next 4 or 6 months, and then it might go down again. So I'm not talking about looking at next week and saying, yeah, Hans was wrong. Of course dollars can go up, because of course it can. We are talking about long-term trends. And here I'm seeing this scenario as much more likely than the opposite. So we can see dollar might be going up, economy under control, the unemployment is dropping, the interest rate might be held just neutral here. I don't think anyone in United States are interested in a higher interest rate. They have some very high leverage on a lot of companies also compared to the overall GDP. And we saw at the end of 2018 when Fed was saying, yeah, well, we might not be, we're going to raise the interest again. We saw the market drop 20%. And then at the end of 2018, I think it was one of the last day of the year, they said, no, well, we might just lower the interest again. And all of a sudden the market went straight up. So they're not going to raise their interest rate anywhere near future here. So this would mean no further Fed interventions was needed. And that was just lead to a controlled growth in the future. And everybody lived happily ever after. I hope you can hear on my tone of voice that I don't believe this scenario. I think that the best case we can hope for is the bad scenario. And that means that if you believe that, you can start to think a bit about hedging your US dollar investments. If you are a long-term investor and you think, yeah, well, I'm going to need my money in 20 or 30 years, you might want to think a bit about what sort of sectors you are focusing on, because some of them might be taking a beating in the near future and maybe the next decade or so. So I'm just urging you to have this in mind when you invest. Don't fall into the trap of thinking that United States and the US dollar will be strong forever and ever and ever, because history tells us otherwise. It tells us that we might, at least if we look at the statistics, might be at the last decade or so of the US dollar as the dominant world reserve currency. And when we see how many countries that today are annoyed and irritated and even mad at United States for their lack of responsibility in having this reserve status. We see China coming up fast, India, we see Russia, we see some strong South American countries and African countries, all of them interested in joining a union, saying, yeah, well, maybe United States should not be the main currency anymore. Then at some point the line snaps. And as I said, the ugly scenario is not a pleasant thought to think of. So let's hope that we can keep it at the bad scenario. And in my day-to-day trading, this is not something I am calculating all the time, but I have it in the back of my mind, and I'm looking for small signs that we are heading in this direction. I'm looking for signs that China succeeds in building an alternative to the petrodollar and so on. And I will keep you posted of my findings. And as I said, I might be completely wrong. I'm not an economist. I'm just a private investor, and I've been doing this for a lot of years. And to be honest, I think it looks bad. So I hope I didn't get you in too bad of a mood. I hope you feel like coming back to watch my videos in the future. Take care of yourself and your money out there, and remember to like and subscribe. I'll talk to you again soon. Bye for now.